Barclays Capital. Rady is the CIO and portfolio manager of Rady Asset Management. Good to see you both. Thanks for joining us today.
Thank you
for having me.
Harry, actually, you're looking for a short-term top in this market right now, aren't you?
Yeah, you know, the market isn't acting the way it has for the prior few months. You know, on days where the market drops, it's staying down. You know, over the past few months, when the market drops, we saw a lot of buying and the market would just never go down. We're seeing volatility really stick. We're seeing the market actually decline. So we think we're seeing a bit of a short-term top, and we think it's time to pay attention and not be complacent.
All right, Larry, what do you think of that?
I think it's maybe much ado about nothing here. You know, if you think about this year, you've had a lot of bad news. I mean, we started the year with the Mideast going upside down and oil prices soaring. We had the Japanese earthquake, which didn't just affect Japan, but affected production here, for example, and even some weak economic data in the last few weeks. And the stock market's held in, I think, pretty well and is up on the year. So I think it's pretty resilient. And what it's showing you is, A, the recovery's intact. These are just little bumps up and down in the economy, and it shows you the power of easy money. I mean, zero rates, cash and near cash assets, you don't get anything on your money. Stocks look pretty attractive here, and with bond yields so low, and spreads so tight in corporates, stocks look relatively attractive, and earnings are great.
Harry, you're a classic long-short kind of a money manager at this point, but is there anything out there, and I know you look for value, are you seeing any value anywhere in this market?
Oh, absolutely. You know, we're deep value contrarian investor. And so where we see opportunity primarily is in healthcare, energy, and some of the cheap tech stocks. So in cheap tech, Rambus, you know, Rambus has just gotten crushed on some legitimate legal concerns, but we think that if the worst case scenario doesn't play out, that the stock could be a triple. In the healthcare space, we like Community Health, the CYH, trading around book value, 9 times earnings, 0.2 times sales. We think that has 50% upside. And last but not least, Northern Oil and Gas, ticker NOG, trading at it's trading around 20 bucks. NAV is around 30, and that doesn't give any credit to probable reserves. So we think that that has some real upside.
Okay, Larry, what would you be buying right here?
Yeah, well, we agree on the energy side. It usually does well late in the cycle. It really hasn't caught up with the rally in the rest of the stock market. We do think energy prices will be bouncing back up gradually over time. We also like industrials for some of the same reasons. Those are the places we're investing in. A little bit also on financials and technology.
Financials, they've lagged. You feel they will come higher? I mean, we were talking yesterday about how they seem to be sensing that maybe rates are going to be going up here. What do you think's going on with them?
Well, I don't think they're sensing rates. I mean, look at what the Treasury market's doing with this spate of weaker data. I don't see that. I think what's happening on the financials is banks have raised, they're very liquid, they've got a lot of capital, and as the economy continues to improve, you're going to see better opportunities for lending, for banks to employ that capital and start leveraging a little more, again, after deleveraging for a very long time.
Gentlemen, thank you both. Good to see you. Thanks for joining us today.
Thanks for having me.
You bet. Another story we've been following closely, that of now